Meanwhile, resale transaction, any subsequent sale of a property that follows the initial first-time sale from the developer for an off-plan or completed project stood at 4,230 in February, representing a market share of 46.3%, increasing by 9.1% month-on-month basis. With this increase in overall resale activity, the portion of off-plan resales continued to grow, up an additional 1.8% in February, reaching 28.3%. Off-plan resale activity is an important metric to watch in the growth phase of the market, as it serves as an indicator of speculative activity which can drive prices up to an accelerated pace that is not sustainable. Whilst growing each month, this current level of activity is skewed towards properties that are within a year of an anticipated completion, and the premium that sellers are making on such sales are relatively commensurate with overall market appreciation and the price of available ready comparable properties. Should activity move towards properties that are further away from handover, caution should be taken, as this is likely driven by speculators looking for a quick flip at the prices that may not be in line with the market values at handover. New off-plan development project launches continue full steam ahead, with just under 5,200 off-plan units added to the market for sale at an anticipated combined gross sales volume of 20.7 billion dirhams. Apartments represent 78% by volume of this new inventory, while villas and townhouses represent 11.3% and 10.7% respectively. Year-to-date, new project launches are just shy of 15,000 units and have surpassed 45 billion dirhams in aggregate sales value. Despite the high interest rates environment, the volume of mortgage transactions remained high in February, with a total of 2,477 loans recorded, their second highest monthly level since August 2021. A more detailed look at the mortgage market reveals that the highest growth segment was bulk mortgages, those taken by developers and large investors, with multiple units increasing their market share by 2.3%. The 951 loan transactions were spread across several projects, most notably Garden View Villas 392 in the Gardens, the Algaf Resident 142 in Arjan, and Varsan 114. Meanwhile, refinancing and equity resales also increased their market share, growing by 1.5% to 35.7%. The remaining 25.9%, down 3.8% from the last month of loans, were taken new purchases money markets, with the average amount borrowed being 1.72 million dirhams at a loan-to-value ratio 77.2%. In February, Emirate-wide average gross rental yield for the residential properties held relatively firm, decreasing by 0.01% month-on-month basis to 6.64%. Yield for apartments saw a minor decrease of 0.01%, falling to 7.02%, while villa yield fell to their lowest level in 7 months, down 0.22% to 4.88%. There was no change for the townhouses, with the yield holding at 6.31%. The fall in villa yield can be attributed to sales value remaining high, with the bid-ask spread yet to narrow significantly and the rental rates appearing to have reached their peak after rapidly increasing over the past 18 to 24 months. In general, our expectations for yield are for some minor fluctuations over the first 2 quarters of the year, followed by downwards pressure, with rental prices cooling off as several projects, particularly apartments, finish construction and handover, increasing the available supply. Thank you for watching.